Hi there, hello and welcome to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena, a show where our experts will answer all your stock-related queries. So keep sending them in on the number that will shortly flash on your screen. But before that, a quick look at the markets. Now, Ankita, we are trading near that day's low point. We're way off that 25,000 mark. What's the rest of the market looking like?
There's no Friday chair coming in, Kanishka, as far as D Street is concerned. I mean, like you mentioned, we are below 25,900 levels as of now. We are at the lowest point of the day on the Nifty. We're seeing cuts of 190 odd points at the day's lows. Nifty Bank also following suit. We are seeing cuts of almost 0.6%, 334 points cut thereabouts on Nifty Bank as well. At the day's lows is what we are seeing. If you look at the broader markets, though, that is seeing a sharper knock. In fact, and the mid cap is trading down 1% in trade, and small caps has been underperforming. Has been underperforming for quite a few sessions. Continues its underperformance with cuts of almost 1.5%. If you look at the sectors, then there's only Nifty Pharma that's just managing to hold out in the green, albeit very, very marginally right now. It's absolutely flat, but it is managing to hold out in the green nonetheless. But all the other major sectoral indices are trading in the red, with the major knock coming in on Nifty Media. That's down and out, almost 2% in trade. Nifty Energy, Nifty Auto, Nifty Metal, seeing cuts of almost 1% in that pecking order. So these are the top losers. But speaking of the losers, then there are a couple of stocks that are moving on the back of the quarter 1 earnings. First up are the Bajaj twins. Now remember, Bajaj Finance has come out with its results, there has been misses, and there have been some mixed brokerage calls as well. Now it is sinking in trade at the back of the fact that the credit cost has stayed high. The MSME business growth has taken a hit. And on the back of that, we do have Bajaj Finance and Bajaj Finserv taking the sharpest knock in trade, with cuts of more than 4% in trade as the top Nifty losers. On the winning side, though, we have SBI Life, another earnings candidate that has posted its earnings, and the street has given it a thumbs up. That's up in a way 2% in trade. And in fact, if you look at Nifty, barring 6 counters, the rest of the Nifty counters are trading in the red, and advanced decline ratio is comfortably in the favor of declines. And India VIX has also shot up 4.5% as of now. 11.21 is where India VIX also stands. So a lot of market volatility, Kanishka, and clearly no Friday chair coming in for D Street.
That's right, so no Friday cheer. But let's get started with all the queries then. Now, requesting our viewers, now you can share your stock-related queries on WhatsApp. Do ping us on the number that's flashing on your screen and get investment analysis on your holdings and tips for fresh buys in the market. So write to us ASAP. Don't forget to mention your name, your stock's name, your holding period, and your investment time horizon so that our experts can answer your queries. But to answer all those queries, now we are joined by G. Chokkalingam, the founder and head of research at Equinomics Research. Hi, Mr. Chokkalingam. Good morning. Thank you so much for joining us today. Now, before we get started with all the queries there, what are you making of the markets at this point? Do you think this consolidation is going to continue in the next week as well?
Quite possible. Market might remain weak for 1 or 2 more weeks. The single most worry is only on signing the trade deal with the US. Yes, signing agreement with UK is a great achievement, but in terms of economic dependence, in terms of goods exports and IT services exports, within the goods exports and also particularly the pharma exports, so we have a major reliance on US economy. Therefore, the signing deal with the US quite successfully would be a key trigger for the market. And till that is signed to the satisfaction of Indian economy, market is likely to be weak. But otherwise, on the domestic factors, whether you are talking of India's fastest GDP growth among major countries, monsoon, food grain production, reversal of interest rate cycle, forex reserves, everything looks quite robust. So therefore, there is not a major worry, but we need to wait for this signing of agreement with the US. Till that time, market will be weak, and we have to bear with it.
All right, moving on then, Ms. Chokkalingam, let's get started with all the questions that have been pouring in. Let's get all the questions answered with you. Then let's take the first talk that we have received, that is coming from Genobia, who's writing in from Chennai. She says she's holding Maruti. Kindly suggest whether she should be holding this stock or selling it. She's not written the buying price or the holding period, but she wants to know whether she can sell Maruti at this juncture. Mr. Chokkalingam, you know, these auto counters have been specifically in focus as far as the trade tariff deals are concerned, and Maruti hasn't really done much for a while now. What do you suggest? Should she be holding it for long, or should she like sell it out?
You are absolutely right. The automobile sector is going through tough time. The passenger vehicle growth is in over single digit. And for the whole of current fiscal, even the industry association has predicted anywhere 2 to 4% growth only year on year. And therefore, it is going to be tough for Maruti. So somebody is interested in automobile sector, then one can consider Mahindra and Mahindra. So we have a buy rating on Mahindra. And I would give sell call on Maruti purely based on the research valuation and the prospects. Why I would give buy call on my M&M is that despite heavy headwind in automobile industry, this is growing its sales in strong double digit. Not only that, not only the strong growth in passenger vehicle segment, even in tractor segment, it is beating the peers in the industry, and that is likely to continue in the current fiscal. So therefore, M&M looks far superior to Maruti.
Okay, so that's the view on M&M actually. That's the preferred bet in the auto space on the back of great segment performance. But moving on, Mr. Chokkalingam, we have another long-term query. So this viewer, Satya Veni from Vishakhapatnam, wants to invest 3 lakh rupees in CAMS. He wants to know what's the safe entry price for CAMS.
It's a great company, no doubt about it. But the valuation comfort is not there. I would suggest, wait for June quarterly results, because, in April, June, we had a little stress in the stock market. Most capital market related companies, infrastructure companies, are likely to post little subdued performance. So I would suggest, wait till the results are out before taking any decision.
Right, moving on then, it's time for us to slip into a short break. Don't go anywhere. After the break, we're getting all your questions answered on the other side. Keep sending them in. The number is flashing on top of the screen. We'll be back soon.
Here you're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena, a show where we are taking all your stock-specific queries with our experts. Well, on the technicals, we are now joined by Osho Krishan, Chief Manager, Technical and Derivative Research, Angel One. Hi, Osho. Good morning. Thank you so much for joining us today. Well, I have the next question for you only, actually. So a viewer... Our viewer wants to know your view on Ultratech. They want to hold this stock for a period of 6 to 9 months. So they want to know at what levels should they enter. This is Jaya Krishnan writing from Kerala.
All of you, and firstly, thank you for having me at the show. Well, looking at the technical perspective of Ultra Semco, then this counter has seen a very strong traction and has been into a very strong secular uptrend. Currently, the counter has given a breakout around the zone of 12,000 and is hovering comfortably above the zone of 12,000. So at current levels also, one can look to accumulate this counter in a staggered manner, because in the coming period, there might be some possibility that the counter can see some kind of profit booking or cool off towards the zone of 12,000 towards 11,800 kind of a zone. So that will be the apt zone to start accumulating the counter. And on the higher end, with the kind of technical structure this counter has, I expect that on the higher end, approximately 13,200 will be the target for medium-term time frame. So one should definitely stay intact with their investment for a target of nearly 13,000, followed by 13,200 from short to medium-term time view.
So that's the word on Scient. But let's move on to the next counter. This is V. Mathur, who's writing in from Delhi. He's a senior citizen and a long-term investor. He says he plans to invest 2 lakh rupees. He wants to know which is a better bet. Is it Ashok Leyland or Hero Motor or L&T? Mr. Chokkalingam, he has 2 lakh rupees to invest. What's your pick?
Best stock in relative terms among these three. It has been securing a lot of orders. Even yesterday, it has reported securing orders. And now today, IT segment, which used to contribute almost half of the total consolidated profit, now that is narrowed down to one third. So that's a positive in our current situation when IT sector is going through little stress, and the engineering sector is doing very well, and it has a lot of promises in terms of growth in and profit. So I would prefer L&T to other two stocks.
All right. So Mr. Chokkalingam likes L&T over the other two. But moving on, we have a question for you, Osho. Now, the question is from Vibha. She has 50 shares of Hindalco at a price of 600. She wants to know what would you advise her for the short term? Should she continue holding or should she exit this one?
See, currently the counter is looking very positive. Overall, the metal space have started gaining decent traction. Hindalco specifically, looking at a very short-term point of view, I expect that in the coming future, if it breaches the zone of 700, that has been a very strong resistance in the near term because it has tested the zone approximately 2 times. But from there onwards, we have seen some kind of correction in the counter. So overall, I expect that once it breaches the zone of 700, then from here onwards, we can expect another 50 point of rally in this counter. So 700 will be a very crucial juncture for the counter. So it will be advisable to stay intact with investment and trail your stop losses to higher levels. Currently, 680, 685 is a very strong comfort zone for the counter. So stay invested with a stop loss of 685 on the lower end, while on the higher end, any breakthrough above 700 can push the counter towards 750 from short-term point of view.
All right, moving on then from Hindalco to the IT pack. Now, this is Dr. Sampantham, who's writing in from Tamil Nadu. He says he holds Persistent System at a buying price of 5,086 rupees, and Coforge, he's bought it at 6,000. He's bought it at 6,600 rupees is where he's bought Coforge. He says that the amount of profit, of course, has gone down drastically for him. I mean, he's now facing, he's sitting at huge losses, and he says that, the news coming in on Trump tariff, that is going to affect the IT industry. He wants to know whether it will affect the IT industry. What should he do? Should he hold these counters in the medium term, or what price can he exit? Mr. Chokkalingam, what would be your take on this?
Yeah, there are 2 points one has to address when you're talking about these IT stocks. The Trump tariff measure will have a negative impact on the US economy only in the short term. He's trying to fix a long-term crisis for the economy, which is growing trade deficit, growing fiscal deficit. This tariff will address both of them positively. US will make a lot of money through this tariff on imports because it is against almost all major economies in the world. And it would also improve the manufacturing within US. So medium to long term is going to be fantastic. And therefore, in the medium to long term, the IT sectors also will come back into better position. As far as these two stocks are concerned, the problem was that, till about few quarters or a year ago, they were trading at exorbitant valuation. So that is why you are seeing this massive correction. But however, quality of the stock is unquestionable for both. Even in relative terms, among the mid-sized companies, if you take the growth, Coforge and Persistent have done reasonably very well. And now both of them are corrected a lot. So considering all this, I would suggest a hold for medium to long term on both Persistent and Coforge.
All right, so a whole call coming for both Persistent Systems and Coforge in the medium to long term. But Osho, now coming to you, we have a query from Akshay, who's writing from Bangalore. He bought 150 shares of PFC at a price of 420 rupees. He wants you to suggest a target for the next 3 months.
See, overall, the technical structure for PFC is quite positive. It's not on the negative front, but overall, there has been a very strong consolidation going on in the counter. So I expect that once it breaches the zone of 200, a simple moving average, that is approximately 425 kind of a zone, then from here onwards, we can see a gradual up move in the counter. Overall, the technical structure is very positive with a formation of higher lows on a technical time frame chart. So I expect that one should stay invested in this counter. Any breakthrough or any sustained buying above the zone of 425 can start positive momentum in this counter. And on the short-term perspective, I expect 460 to be the immediate target for this counter.
All right, so those are the targets for PFC. But let's go across and take this query by Arvind Reddy, who's writing in from Hyderabad. He says he wants your view on NCC for the long term. Can he invest at this current juncture? Mr. Chokkalingam, NCC, what is your view for the long term?
It's a quite decent stock, no doubt about it. Historically, the track record has been quite good, and the stock also crashed a lot. So considering that, also considering the fact that it is around 20 PE, one can hold it. In case it dips below 200, it will be a good buy.
Decent stock there, NCC. But with that, it's time for a quick breather. Don't go anywhere. After the break, we'll come.
Taking all your stock-specific queries with our experts. Well, let's get back to all the queries then. Mr. Chokkalingam, this query is coming from you. This is Rajan writing from Bangalore. He wants to invest 10 lakh rupees and he's looking for recommendations in the hospital and consumption space. And he wants to invest for the next 2 years. What would your top picks be in the hospital and consumption space?
Just on a lighter note, unless he is a professional, he should look at the entire market to make money. One should not, retail investors without any professional background, they should not have a inherent bias for any sector, because you should be married to money, not to the sector. This is on a lighter note. Now, since he has asked to hospital sector, I would suggest two stocks which I firmly believe: Apollo Hospital and East India Hotel. These are the two stocks I love. I like most. Personally, I do not own them directly or indirectly. Apollo Hospital is going to be perennially a growth story. 10 to 12% growth is possible year after year, and considering the the current state of demand for health services. And the East India Hotel, it is one of the cheapest hotel stocks as compared to ITC Hotel, Indian Hotel, this Bangalore-based new hotel. This is the cheapest in terms of enterprise value to EBITDA. Not only that, the shareholding pattern of East India Hotel also gives a lot of comfort. Both Reliance Group and ITC Group together, they have more than 30% stake in this company. So that gives a lot more confidence on re-rating of the valuation for East India Hotel. So these are the two stocks I would recommend strongly.
All right, so that's those are the recommendations from the hospital space. But let's move on to the next question, where this person Anita is writing in from Pune. She says that she's bought NCC. She's bought it at a buying price of 124 rupees. She wants to know the outlook for the next week of trading. She says that is it expected to rally, or is it likely to be in a consolidation mode? She's bought it at 124. What are the levels to watch out for on NBCC, Osho?
For NBCC, I expect that the counter is into a kind of a correction zone after it breached the zone of 115 in the recent trading period. But I expect that in the short term period, the counter has a very strong support around the breakout levels of 105. So till that levels, there is a chance that, or a possibility that the counter can retest the neckline of breakout, that is at 105. But from there onwards, one can expect a decent resurgence in the counter. On the higher end, the immediate resistance is placed around 115. And once it breaches the zone of 115, then we can expect the higher momentum to continue towards the zone of 130. So for short term or immediate term basis, I expect another 5 to 6 points of dip in this counter, from where onwards one can look to start accumulating this counter.
All right, so that's the view on NBCC. But moving on, we have another query from Pratiksha, who's writing from Muscat. She has in Paytm, and she has a profit of 25% and 35% in both of in them respectively. She wants to know whether she can continue to hold these counters for the next 6 months as well. What would the target prices be? Osho, you want to take this?
For Info Edge, I expect that the counter is into a very strong consolidation period, but overall, the technical outlook still has a very positive, or on the positive side, because I expect that it is at a very strong support levels of nearly 1380 to 1400 kind of a zone. While on the higher end, there is a very strong resistance around 1500. So one should wait for those levels to get surpassed. Once we witness a sustained buying above the zone of 1500 for Info Edge, then we can see a continued momentum in this counter. Immediately 1650 will be the next target in the short term period. But once it breaches the zone, then we can see kind of a positive momentum in this counter.
Moving on to the next counter then, this is K. Narayana Reddy writing in from Warangal. He says he holds 1,000 shares of Eternal Zomato at a buying price of 115 rupees. Shall I book profit or higher price? Wait for the higher price in the near term. Osho, near term, do you see? I mean, it has already scaled past 300 levels after the Q1 numbers came out. Renewed optimism on Eternal. Do you think he should start booking out his profits, or there could be more upside in the near term?
See, definitely one should try to book their profits also, because in this week only we have seen approximately 20% kind of a surge in this counter. Although it is at a lifetime high zone and there is a kind of a breakout also on the technical front, but with the kind of momentum that this counter have seen in this week, I expect that there can be a possibility of some cool off or profit booking at these levels. So I expect that in the short term period, one should try to book a partial profit while keeping 290 as the stop loss for the near period. Overall, the technical structure is very robust and dip should be accumulated. So I expect that if in future, if there will be any kind of dip below the zone of 290, one should look to even accumulate this counter. But at current levels, it's better to book partial profit and 290 as a trailing stop loss.
Okay, so that's the view on Eternal. But another question for you, Osho. This is actually again on Paytm. This viewer has been holding 300 shares of Paytm at a price of 880 rupees. She wants to know whether she should book profits at this juncture, or should she wait for a higher price in the short term.
See, overall, Paytm has given a very strong breakout around the zone of 1000. 1000 was a very strong resistance for the counter. It has tested in the month of October 23 and then last year in December. And in this month, we have seen a very strong breakout above the zone of 1000. So I expect from here onwards, there is a possibility for the counter to retest the zone of 1200, followed by investment. And for a safer side, because the buying price is approximately around 800, it is advisable to trail the profits with a stop loss of 1000, because that is now expected to provide very strong support for the counter. And any breakdown below 1000 can again pull the counter towards the consolidation zone. But overall, the technical structure is very positive, and 1200 to 1300 is on the cards for Paytm from medium term time frame. So one should definitely stay intact with their investments.
Stay intact with the investments as far as Paytm is concerned. But let's move on to the next question. This is by Mrs. Kala, who's writing in from Thane. She says that she wants to invest 5 lakh with a 5-year horizon. Please guide the right time to invest and which sector, which stocks. Basically, she wants to invest 5 lakhs and she wants to know where can she park her money. Mr. Chokkalingam, what would be your bets? 5 lakh rupees, how should she diversify that? And what should the sectors be?
Yeah. So a lot of sectors in Sensex and Nifty are going through, what I call single digit growth syndrome. So there are limited options, but still one can consider large cap and also small and mid cap mix. That will be safer even for long term. So in the large cap, we have a strong buy recommendation on Coal India, which gives close to 7% dividend yield. The kind of expansion they are doing and diversification, I am pretty confident that in the long term it will create a lot of wealth. So Coal India, State Bank of India, these are the two stocks in the large cap. In the small and mid cap, Oracle Financial Software Services, Syngene Technology. Apart from these two, I would also recommend strongly Balmalari Company, and also as I already mentioned, East India Hotel, also one can consider, and then Bank of Maharashtra. It's been a phenomenal growth in the last 5 years, and that would be maintained for the next 5 years. Among all these stocks, we personally hold only Balmalari Company.
All right, so that's how Mrs. Kala can diversify her portfolio and put 5 lakh rupees.
Well, let's resume then now and take all your questions again. This is Amit, who's writing in from Mumbai. He has 700 shares of Ajanta Pharma. He's bought it at an average price of 1,500 per share. He's bought it at an average price of 1,500 rupees. It's an outlook for the stock performance over the next 6 months as to whether he can buy more at given levels. Osho, can he get in more into this counter right now, or exactly what should he be doing? Because he wants to know whether he should be holding it really or he should be selling it out.
See, overall, the pharma space is looking very lucrative at current levels, and Ajanta Pharma, after witnessing a high of nearly 3,500. There has been some kind of correction in this counter and a strong consolidation that also represents a strong support base for the counter around the zone of 25 to 2,600 odd levels. So I expect that from here onwards, one can definitely start accumulating this counter even from medium term perspective. I expect that in the short term time frame, 3,000 will be the first target, and once it breaches the zone of 3,000, then again it can retest the zone of 34 to 3,500 from medium term point of view. So one should definitely stay intact with their investment and at current levels can also start accumulating or adding their positions at current levels also.
All right, so stay intact, or you could add at current levels as well for Ajanta Pharma. But the next question coming for you, Mr. Chokkalingam, this viewer has specifically asked for you. He wants your mid-cap ideas for the long term. This is PVN Rao writing from Hyderabad. He wants you to suggest a few mid-cap picks that he can invest in for the long term.
Yeah, so I would recommend 3-4 stocks. One is, as usual, Nesco. It has been slightly improving the performance, but still it is a long way to go in terms of further appreciation. So one is Nesco, and second is Bombay Pharma. Nesco I continue to recommend because it has got a huge expansion potential, tripling the capacity in Mumbai, and also outside Mumbai, it has got 3 highway infra projects. So in the next 4 to 5 years, I believe the earnings can even triple for Nesco. And second, Bombay Burma. A couple of days back, the promoter family's interview on the media also gave a lot of confidence, because perhaps for the first time in the 15 years, now the management is talking about a wealth creation for shareholder. That is positive because Bombay Burma has the highest holding discount of 80%, and there is scope for reducing this holding discount. It has Britannia as a subsidiary. Third, as I already mentioned, Bank of Maharashtra. I believe it's a phenomenal evolving growth stock. And fourth is Syngene International. There is another pharma company, beaten down stock. And as compared to newly listed, comparable company, this Anthem, this is far cheaper. So these are the 4 stocks I would have a strong recommendation. Among these 4, first 2 stocks, Nesco and Bombay Pharma, we have invested personally also.
All right, so these are the names from the mid-cap space that you could be perhaps looking at investing in. But let's move on to the next question. This is Ramya is writing in from Chennai. She says that she's invested in Castrol at a buying price of 219 rupees for the short term. She wants to know, so she's sitting at a profit right now, but she wants to know if she should be exiting at the current level, what are the levels to watch out for, and should she be accumulating more, Osho?
At current levels, the counter is looking quite good, although there has been not very strong momentum in this counter. But I expect that there is a gradual up move on the broader time structure. I expect that 230 is a very crucial hurdle, and the time it surpasses the zone of 230, then we can witness some kind of momentum coming back in this counter. But overall, the technical structure is quite sideways to bullish, not very much aggressively at current levels. But once it breaches the zone of 230, then we can see some kind of a strong momentum in this counter towards a rally towards the zone of 260. So at current levels, one should stay invested, and once it breaches the zone of 230, then one can even add positions in this counter for 260 as a target.
Okay, so those are the targets for Castrol India. But moving on, we have a query on NTPC Green Energy. Our viewer has been holding the stock since the IPO with an average price of 108 rupees. This is Venkataraman writing from Hyderabad. They want to know whether they should continue to hold this or sell. Osho, you want to take this?
Can you please repeat the stock name?
NTPC Green Energy, they've been holding it since the IPO and their average price is 108 rupees.
Okay, so overall, yes, the stock is looking quite lucrative at current levels because we have seen a very strong correction followed by very strong consolidation zone in this counter. So I expect that the zone of 104 to 102 now is a very strong support for the counter, and any breakthrough above the zone of 115, because the counter has been consolidating approximately in the range of 8 to 10 points. So on the lower end, 104 is a support. On the higher end, 112 to 15 is a resistance level. So once it breaches or comes out of this consolidation zone, then we can see some kind of positive traction in this counter. So at current levels, it's better not to accumulate the counter and not to even exit at current levels. But if it breaches the zone of 115 on a decisive manner, then one can look to start accumulating this counter. I expect that that will provide very strong momentum in the coming future.
All right, moving on to the next counter in that case. This is Ramesh who's writing in from Hyderabad. He wants to know, again, it's a short-term view. What should he do with the HAL? He's holding the shares. He's bought it at a buying price of 4,900. What should he be doing with this counter? He's clearly sitting at a loss right now. Osho, should he really wait and watch for an upside coming in, or should he really cut his losses at this juncture?
Yeah, at current levels, I expect that major of the defense counter can see some kind of correction or profit booking, because we have seen a very strong and vertical rally in these counters. But for HAL, the technical structure is quite good, although there is a possibility of further correction towards the zone of 4,400. So that will be the zone where one can expect to accumulate this counter. But already once the position is at around the zone of 4,900, then that means there from these levels one can expect a decent plunge or decent correction. But overall, the technical structure from medium to long-term perspective is very positive. In the short-term period, there can be some kind of consolidation from 4,400 towards 4,900 odd levels.
Okay, so that's the view on certain defense counters. Thank you, Osho, for that. And well, that's all the time we have today to take all your queries. Thank you so much, Osho and Mr. Chokkalingam, for joining us today and helping us with your expert views on the queries that our viewers have sent. With that, it's a wrap on this edition of Buy Now, Sell Now. Ankita and I will take your leave, but don't go anywhere as market action continues on ET Now.